more time. So what's going on, traders? My name is Mike from Capitol Hill FX. I'm super pumped that you guys all made it to this free live trading sessions. I'm going to make sure to make it a priority to do more of these live sessions because I think it's super important for free members to get a good idea of the markets. You shouldn't have to pay a dime for it. So I do these daily live trading sessions every single day with my premium members, usually around the same time, just so we're preparing ourselves for the markets and we're going over trades that we previously took out. And of course, I call all of my trade orders and all of my trade setups live time with my premium members in my premium analysis chat. And then we sort of wrap back and go over and sort of recap all the trades. And then we look for a market outlook, just going over pairs that could potentially play out. But really quickly, before we actually get into the market outlook, I just want to recap the past week of profitability. I mean, to start the week of April, let alone the whole entire year, right? Last month, we did 10.36%. The month before that, we did 14.3%. And the month before that was 10.85%. So overall, what are we over? Like 40% profit for the year of 2023. Last week, we had a banger of a week, like near 10% profit to start off the week of April. And I called every single one of these trades live time with my premium members. I'm going to go over like one or two of the trades just so you get a better idea of how I'm trading the markets. And then we're going to go into the weekly market analysis, going over pairs that could potentially play out. So first things first, we're going to go over CAD CHF. We could go over all of these, but I just want to pick out a few of them. We're going to start off with CAD CHF. And if you don't know how I trade already, it's literally bounces off of daily horizontal levels. I wait for price to come to a significant horizontal price point, and I just wait to monitor the price action around this significant horizontal level. So on the daily 12-hour timeframes, we're marking up the market structure. So we're just analyzing significant market structure where price could potentially reverse at. And then we're scoping down to the smaller timeframes to make sure that the price action is validating that market structure. So on the daily timeframe, we can see on CAD CHF, we just have some super clear zones that price has reversed around. And remember, there are three things that sort of meet my criteria for a significant support or resistance level. The first one is clear intent with direction. That is the most important one, right? Every time we come to the zone, are we bouncing or breaking? And we need to make sure that most of the times that we actually come to the zone, we bounce to some sort, right? Like this significant resistance level. For a majority of the time that we come to this significant resistance level, we are bouncing, right? It's not consolidating. We're not breaking through it and then testing it as support when we want to or resistance when we want to. It's super clear support and resistance level. And then even this bottom level, which is the one that we actually traded off of, we could see that we treated it as support previously, and then we ended up breaking through it, came back, tested as resistance, pushed away as resistance, and then we came back and tested yet again as resistance. We're going to go down to the 12-hour time frame now. Remember, starting off with that top-down analysis approach, starting off on the daily, working our way to the 12-hour, and then we'll work our way to those smaller time frames. So we can see we do have this significant horizontal level, very prevalent on the 12-hour time frame as well. We pushed away as resistance previously. We just came back to this significant horizontal resistance level. And what was I waiting for? I was waiting for a lot of sellers to be present around this significant horizontal level, because the last time that we actually presented ourselves around this zone, we had a very strong bearish push towards the downside. So I was just anticipating the same exact thing to happen around the significant horizontal level. So now that you have a better idea of what I'm analyzing on the daily 12-hour time frame, clear intent with direction, how recent has trading taken place around the zone? Of course, if we traded around this zone 3, 4, 5 years ago, the zone's not going to be as significant rather than us trading off of it 2-3 weeks ago, right? So we want to make sure that we're trading off of the zone relatively recently, which we were because we just recently bounced off of this March 21st of 2023, so literally a couple weeks ago. And we want to make sure that we have multiple rejections around the zone, right? The more rejections that we have around a zone, the more significant that zone becomes. And we can see that we have 10, 12, 15 different rejection points around the significant horizontal level. It's not like we just bounced into this level once and then we're coming back to test it yet again, right? We've bounced here so many times as support and multiple times as resistance. So this seems like a very significant support resistance level that we could potentially trade a bounce off of. So we have a very good general idea of what I'm looking at with the market structure in the higher time frames. Now what I'm going to do is I'm going to go down to the lower time frames, and I'm going to analyze the price action around the significant horizontal level. My lower time frame is the hourly time frame. It's very important that you choose the time frame that works best for you. Hourly candle closures just works best for me, so that is what I use on a day-to-day basis. But like I said, make sure to test and execute on whatever works best for you. Maybe you're sort of more of a scalper and you'd rather execute on the 5-minute or 3-minute, then execute on the 5-minute or 3-minute. Don't just take what I say and just be like, oh yeah, that's the be all say all, right? But we could see we push into the significant horizontal level, and I tell my premium members this all the time. Indecision leads to decision. We could see that we had a lot of indecision around this significant horizontal level. We're continuously trying to wipe out the highs, but what are we being left with? Top heavy wicks in the position of the real body near the bottom of the candle. That's giving us a good indication that price is having a very difficult time wiping out the highs and giving us a very good indication that we could potentially drop towards the downside, because if we're having a difficult time wiping out the highs around a significant daily resistance level, that's a very good indication that we could potentially drop towards the downside, and vice versa. If we're having a very difficult time continuously wiping out the lows, but we're failing to wipe out the lows and we're leaving wicks in the position of the real body near the top or the bottom of the candle, that's giving us a very good indication that we could potentially reverse towards the downside or towards the upside. In this case, it was towards the downside. We could see that we steadily created lower highs and lower lows until we actually dropped towards the downside. What actually allowed me to place my entry was when price actually tried to wipe out these previous highs and we formed this top heavy wick, and then we started to have a nice little bearish candle closure. Placed my entry with my stop loss right above the previous highs because we've had a very difficult time trying to wipe out these highs, and then my take profit at a 1 to 2 risk to reward ratio. This absolutely smashed take profit in like 2 or 3 candles, and I believe some of my premium members also took this trade as well. Super clear trading results, super clear trading criteria. I'm not saying, oh, wait for the MACD, wait for the RSI, wait for the Fibonacci. No. Bounces off of daily horizontal levels. Daily 12-hour time frame. What zones seem the most significant where price could potentially reverse at? If we reverse there previously, that makes it a little bit more significant. Then we go scope down to the smaller time frames and we analyze the candles on those time frames, and we get a better idea. Okay, it looks like price is holding as resistance or support, so we're going to trade a bounce off of that. Let's look one more trade really quickly, and then we're going to go into the market analysis. AUD-CHF. Let's go to AUD-CHF. And again, all of these are literally the same exact trading criteria. Bounces off of daily or 12-hour horizontal levels. Because sometimes I'm trading off of 12-hour levels, which are still relatively significant, because some of you are trading off of like 15, 30-minute time frames, which, again, it's not bad, but you have to understand the higher the time frame, the more significant that those zones are going to be. If you're analyzing zones on the hourly or you're analyzing zones on the 30-minute time frame, it's just not going to be as a significant zone. So you want to be very careful with those types of zones that you're monitoring. Anyway, we could see daily time frame, and we'll be able to see this zone probably better on the 12-hour time frame, but it's very important to start off on the daily and then work your way down to those smaller time frames. And this is what I was saying when my computer is going to lag a little just because I have this recording software, but stick with me here. We can see daily time frame. We have bounced around this significant horizontal level, and a lot of you may be like, Mike, that's a significant support zone. It doesn't look like one. Let's go down to the 12-hour time frame. Remember, I use the daily and 12-hour time frame to collectively look at these support and resistance levels. And we can see at the 12-hour time frame, we did bounce around this significant horizontal level as support previously, right? So I was just anticipating a simple bounce, a push into this horizontal level, and I was waiting for a little bullish push towards the upside. And if we replay it, and I'm not going to replay it just because I don't want there to be any like lag or anything like that, but we could see it was as simple as just waiting for price to come into this zone and wait for some bullish price action. It's literally as simple as that. And a lot of people are like so complicated or so complex with their trading system. I was just waiting for this to come to support. That's literally it. We're going to go down to the hourly time frame and see why I placed this entry. And I actually exited this trade a little bit early, but we still profited off the whole entire thing. So we can see the hourly time frame. We are steadily creating lower highs and lower lows. And a lot of people don't think that you could place counter trend trades. I place counter trend trades all the freaking time. It's very important to know that you could it's nice to trade with the trend, but of course you could trade against the trend. So we can see right when we pushed into the zone, we had an initial bottom heavy wick. That price was already showing that we have some type of buyers. Then we formed another bearish candle, but we could see that this bearish candle still had that bottom heavy wick, right? And then what happened? We had a nice bullish engulfing to wipe out the 2 previous candles. That gave me a good indication that there's a lot of buyers around this significant horizontal level. So what did I do? I placed a buy at the end of this candle closure with my stop loss completely above the zone and my take profit at a 1 to 2 risk to reward ratio. Actually, this is 1 and 1.5 risk to reward ratio. I let it push a little bit into profit, and I saw that we were failing to actually wipe out these previous highs, and we are steadily creating lower highs and lower lows. So you have to be very mindful when you're placing counter trend trades. But that's why I was able to actively manage this trade and close out of the position in a profit of 1.1% profit. And then we could sort of keep it pushing, right? So 2 super clear trades, bounces off of daily 12-hour zones, and we just monitor the price action on the hourly time frame. Who would have thought? Literally super simple trading criteria, super simple trades. Now, what are we going to do? let's go into the weekly market analysis. Let's go over pairs that could potentially play out for this upcoming trading week. Exactly what you guys have been waiting for. Let's start off on AUD NZD on the daily time frame. We're going to be marking up that market structure, and then we're going to go down to the smaller time frames to look at the price action. Daily time frame, right off the bat, we can see that we have a super clear daily horizontal level that price has reversed that in the past. And we actually have, me and my premium members have cashed out on AUD NZD at this exact level, off of this exact level back in March of 2023, March 23rd, March 22nd of 2023. We can see it's just super clear intent with direction every single time, for the most part, that we come to this zone. We either bounce towards the upside or bounce towards the downside. We rarely ever break it besides a couple of times, right? So statistically speaking, probability speaking, it just makes sense to place a buy or a sell position around a significant horizontal level that has caused reversals in the market. It just makes the most sense, right? So daily time frame, when I have it marked up, you could see that there's super clear reversals, super clear intent with direction around the significant horizontal level, right? I don't need to go over that more. And again, if you have more questions, drop them in the chat. This isn't just me speaking at you, right? I want to engage with you guys. I want to answer your guys' questions. I want to personally speak, of course, one-on-one to all of you, and make sure to book that free one-on-one call by heading to that channel in my Discord server. I would love to be able to speak with every single one of you completely for free. So we can see daily time frame, super clear intent with direction, super clear zone. Let's go down to the hourly time frame and just monitor the price action that's playing out around the significant horizontal level. We can see hourly time frame are already beginning to form some type of bearish price action, right? We can see the most recent candle that just closed, and this is all candle closures. We want to make sure that we're reading candle closures, not the open of candles. We're waiting for the candle to close completely before we're actually executing on any of these given trades. So we can see that we already have this sort of top-heavy wick, but the position of the real body is near the middle of the candle, giving me a good indication that the buyers and sellers are sort of having this battle. A lot of people would call this a doji. It's sort of just an indecisive candle, right? What I usually like to see in the markets, I usually like to see that price pushes into a zone, creates a high, right? Sort of like we did right here. Then what I really like to see is I like to wait for price to come back towards the high and fail to wipe out the high. That's what I love to see. Almost 9 times out of 10, that's where I'm placing my trades out of. We push into a zone, form a high around a significant resistance level, or if we have a support zone, a significant low around a significant zone. And then I wait for price to reject away from the zone. And then I wait for price to come back towards that significant high and try to wipe out the high. But we leave a top heavy wick in the position of the real body near the bottom of the candle. That's giving me a good indication and way more validation rather than just entering off of one candle. What's better than one candle? 2 candles. What's better than 2 candles? 4 candles, right? The more candles that you validate, an unsuccessful wipeout of the highs or the lows gives you a more validated trading setup. So you want to make sure to go off of and wait for more candles to validate that you're respecting that support or resistance level so that you could actually successfully trade off of it. So we don't want to just place off of 1 or 2 candles. We want to get multiple candles to get very good validation that we're actually respecting this as support or resistance. And we can see right now we did initially push into this zone, and we could see on the hourly time frame we're just absolutely skyrocketing towards the upside. So that's another reason why we probably want more validation around the significant horizontal level, because we're skyrocketing towards the upside. We want way more price action to validate that we're actually going to have a difficult time wiping out these highs, and we're continuously printing bearish price action. So what I'm going to be waiting for, I'm going to be waiting for price to actually make another steep push into the significant horizontal level and then look for that downside movement. What I usually do is I usually go on the hourly or 4-hour time frame, and I mark up a smaller structured zone within the larger zone to get a good idea of where I want to see price actually interact with around this daily zone. And we can see we actually pushed way higher into this significant horizontal level previously before actually trading a bounce off of it. And again, this is the 4-hour time frame. I'm actually going to be waiting for price push way deeper into this zone, not just the highs that we've established on the hourly time frame, but the highs that we've established on the 4-hour and 12-hour time frame. We want to wait for way more of an aggressive push into the zone, way deeper into the zone, just so that we're not trading the bottom half of the test, because a lot of people do that. They trade the bottom half of the test and they FOMO into the trade because they see that it's melting towards the downside. So what they do is they place a sell right here with their stop loss maybe above the previous highs, and then price actually fully tests the zone and push deeper in the zone, stops you out of the trade, and then ends up heading towards the downside in the original direction that you anticipated. You want to outline smaller structured zones within the larger zone, so you could get a really good idea of where you want to see price interact with and test, so that you get a better idea of monitoring the price action around that zone. So I'm going to be waiting for price to actually interact with these highs. I'm actually going to set an alert around these previous highs just to make sure that I don't have to be monitoring this on a second by second, minute by minute basis, right? I'm going to let the alerts do most of the work for me, and then we're just going to keep it pushing. So hopefully that makes sense, just marking up those smaller structured zones within the larger zones and just waiting for clear bearish price action around a significant daily resistance level. Super clear sell around a significant daily resistance level. Let's move into Euro CHF. I was looking for a bounce off of a significant daily 12-hour support zone. And we can see we're starting to violate this daily 12-hour support zone. I was just waiting, considering we've bounced at this support zone multiple times, I was just waiting for price to potentially bounce here as support and look for upside movement. But this is why we validate the price action. A lot of people, they just place buys and sells around the daily levels. I wait for the price action to validate that we're respecting the zone. And I think that, again, you do whatever you want. I don't want you to take this as financial advice. I'm just telling you what works best for me. What works best for me is actually waiting for the validation around the zone, right? You want to wait for the validation around the zone before you're actually placing the buy or sell entry. So we can see on the daily time frame, we are around the significant daily support zone. We're going to work down to the 4-hour time frame. We can see we're beginning to violate the significant support resistance level. We can see we just had a really nice 4-hour candle closure that closed completely below the lows, and it looks like for the time being, it looks like this support zone is just going to be violated. So I'm not even going to worry about trading a bounce off of it, and that's why it's so key to monitor the price action around these significant horizontal levels before you're actually trading a bounce off of it. Remember, go deep, not wide. Analyze market structure and price action. If you completely understand the concept of market structure and price action, you will win in the markets. I'm telling you that. You don't need to focus on RSI, fundamental data, market sentiment. You don't need to look at all these things. Moving averages, you just don't. You can see there's no indicators on my chart right now. Zero. There's no indicators. It's just market structure and price action. That's all we are looking at. We are just looking at the candles and what the markets are telling us. We're not focusing on any metrics. We're not focusing on anything on the back end. We're literally just focusing on what price is telling us. So I'm going to switch off of Euro CHF just because it looks like we're beginning to violate the significant horizontal level. Now, if you wanted to, we could notice a lot of bottom heavy wicks around this significant horizontal level, right? And a lot of people may say, Mike, I may want to trade a bounce off of this horizontal level. I don't see what's wrong with this horizontal level. Actually, I like this horizontal level a lot. We can see it has clear intent with direction. We're either breaking through it or we're bouncing at this zone, right? So what I would be waiting to see is I would be waiting for price to push a little bit deeper into this zone because we can see we're sort of just tapping the top half of the zone. And I could already tell off of the daily time frame. Of course, when you do this over and over and over again, you'll get very used to like outlining the smaller structured zones on the larger time frames. But just very quickly, we can see we have a super clear daily horizontal level that price has interacted with in the past. And then if we wanted to outline a smaller structured zone, we could see that the bottom of these wicks seems like a good place where price has interacted with. And I would wait for price to actually push deeper into this zone where my alert is sitting right now. And I would wait for price to show us those bottom heavy wicks, the position of the real body near the top of the candle, giving us a good indication that we're failing to wipe out lows and we're going to potentially head towards the upside. So I have my alert set right at the meat of that zone, and I'm waiting for price to push a little bit deeper so that we could actually monitor the price action. Let's switch into Euro NZD. I was waiting for a bounce as resistance off of this significant horizontal level. We could see we had a full candle closure past the zone. So what does it mean when we break past a significant horizontal level, right? Does that mean it's still going to respect? Yes. Usually, more often than not, when we break through a significant resistance level, we usually retrace back as the opposite structure, which would be support, right? So if we completely closed past a significant resistance level like we have right now in this daily time frame, we can see we have a beautiful bullish candle closure that completely wiped out this zone, and it looks like price could potentially reverse back and come back to this significant horizontal level. If price does by some chance retrace back to this significant horizontal level, I will be looking for a buy setup because not only is this a super clear support and resistance level, we could see that we are steadily creating higher highs and higher lows. And most of the time, and most of you know this, whenever we have an impulsive move towards the upside, we have a corrective move towards the outside, towards the downside, excuse me. The markets doesn't just move in one direction. We move in impulse and corrective phases, right? So whenever usually we have an impulsive move, we usually have a corrective move as well. Impulse, corrective, impulse, corrective, impulse, corrective. And this just plays out over and over and over again, right? We want to make sure that we are capitalizing on those corrective moves, make sure that we understand what a corrective move looks like, and then make sure to actually execute the trade so that we capitalize on that impulsive move towards the upside. But we can see for the most part, I have this significant daily resistance level marked up. that could potentially be treated as support. So what I will be waiting for, I'll be waiting for retracement back to the significant support resistance level. And then I will wait for bullish price action to prove that price is going to actually treat this as support before looking for potential upside movement. Remember, broke through a significant daily resistance level, just waiting for a retracement back to that level as potential support. Wait for the price action to validate that we're respecting as support, and then execute on the candle closures. That's literally it. GBP NZD. If I didn't make that simple enough, I don't know. It's just a super simple break and retest. GBP NZD daily time frame. Considering you guys have a very brief, good idea of how I'm trading bounces now, I'm just going to go through these pairs. GBP NZD, we can see I marked up a significant daily, sort of an extreme high. I'm just waiting for price to push really deep into this significant resistance level. We still got a very large way to go before actually coming to this resistance level. Another 230 pips before we're actually reaching this significant resistance level. So I'll be waiting for price to push way higher into this zone before looking for bearish price action towards the downside. And you can see on the right-hand side, I do prioritize all of my trading setups, all of my currency pairs. I highly recommend you doing the same, because if you're looking at like 20 to 30 different currency pairs, you could really be overwhelmed with all of them that you have to monitor. So why don't you prioritize them, right? These are high, medium, and low priority. So my high priority are of course the ones I'm looking at an hour to hour, like 2 hour basis. My medium priority, I look at them like once a day. And my low priority, I look at them like 3 times a week, right? 2 to 3 times a week. And I prioritize these every single week. The start of every single week, I make sure to have my currency pairs that are really well developed near the high priority. And then, of course, the medium and then the low priorities. I think you should do the same, because I'm that type of person where if I'm looking at way too many currency pairs, I'm very overwhelmed. Hence why I have a super simplistic trading approach, right? Bounces off of daily horizontal levels. Super simple, right? Not overwhelming, not all these indicators, not all these different oscillators and MACD and RSI and moving averages on the chart. It's super simple, right? So why would I prioritize, or why would I categorize my currency pairs in an overwhelming, confusing way? It's just super, super simple, right? Just high priority, medium priority, low priority. Let's switch to AUD Canadian dollar. And this was a trading setup that I actually missed. It was overnight last night. So a lot of my trading setups, they end up panning out during the London session, just because that's when the most activity in the market actually takes place, is during the London session. And we could see we had a super clear daily horizontal level that price has interacted with in the past. I'll scroll back, and sometimes we need to go to the weekly time frame. I think the daily time frame suffices here. We can see we've bounced here previously, and I was just waiting for price action to actually validate that price was going to respect here as support. If we go down to the hourly time frame, a lot of people, what they do is when they miss a trading setup in the markets, they never look at that setup again, because it emotionally triggers them. That's not what we're doing here. We're going back to our missed trading setups, and we're seeing how the price action played out, so we could execute on that exact price action in future data. We could see that we push aggressively into this zone, but what ended up happening? We formed these bottom heavy wicks in the position of the real body near the bottom of the candle. What happened? We pushed towards the upside, and then we came to try to wipe out the previous lows again. What ended up happening? We formed a bullish candle. Unfortunately, this happened 4 a.m. my time, so I wasn't able to place an entry because I was drooling in my pillow at this time. But we could see that we did have multiple rejections around this significant horizontal level. Exactly what I like to see. What's better than 1 test? 2 tests. What's better than 2 tests? 4 tests. What's better than 4 tests? 6 tests, right? We want to get as many rejections away from the zone to validate that we are respecting as support or resistance. And we could see we had multiple rejections away from the zone, validating that we were having a difficult time wiping out these lows. And we were potentially going to reverse around this significant daily zone, and that's exactly what ended up happening. So I'm not going to place anything now. I'm not going to FOMO into the trade. I'm not going to chase waterfalls. We missed the trading setup. It's no big deal because we got an insight from it. We made sure that we're waiting for multiple rejections around the zone before we're executing on our next trading setup. Let's switch to Euro AUD, and I'm only going to go through these high priority setups because it only makes sense to go through the high priority setups. Why would I be going through the low priority setups if we don't really want to focus on those? Remember what I said, sometimes we start off on the weekly time frame. This is one of those currency pairs where we're starting off on the weekly time frames, getting a better idea or more context of where price has reversed at, and then we'll go to those smaller time frames. Weekly time frame, we can see that we do have a rather clear resistance level that price has interacted with in the past. We can see way more recently, not too recently, but back August of 2021, like almost 1.5 years, 2 years ago. We ended up reversing around this significant horizontal level, and even back in, November of 2022, back in the COVID days, which seems like an eternity ago, or like yesterday. It's weird. we could see that we reversed around the significant horizontal level as well. So I was just waiting for price to push deep into the zone, form that bearish price action, and then look to actually place a sell order. Let's go down to the hourly time frame and get a better idea of the price action that's beginning to play out around this significant horizontal level. Remember, top-down analysis approach, starting off on those higher time frames and then working our way down to the 4-hour and hourly time frame to pinpoint the price action where price could potentially reverse at. Because a lot of people, what they do is they literally just execute right on the daily 12-hour. That's not what we're doing here. We're making sure to validate the price action around these significant horizontal levels. We could see right on the hourly time frame, which was very, very similar to AUD Canadian dollar. We could see that price had a lot of consolidation. Remember what I said, indecision leads to decision. Price is just continuously trying to wipe out the highs, continuously trying to wipe out the lows, try to make a decisive move towards the downside or towards the upside. We're having a difficult time wiping out the lows. Wiping out the highs. We're continuously trying to wipe out the highs, but we're failing to wipe out the highs. That's giving us a good indication that price is going to potentially bounce around this significant horizontal level. Unfortunately, this candle right here was 5 a.m. my time. So again, I was still asleep. I usually wake up around like 6:37 a.m. But yeah. What about too many tests? That's a very, very good question. So how many is too many tests, right? So too many tests for me is when price is clearly testing a zone. Let's say, and it'll probably be better to illustrate this. Let's say we are steadily creating, and I'm going to sort of do this on a cleaner chart because I think it's better to illustrate it. I could only vocally say so many things without actually showing you. I'm just going to visually show you. Let's say price is creating higher highs and higher lows, right? We're coming up to a significant horizontal level and price is beginning to push into a significant resistance level, right? And we test for a first time. We push into this level and we push and test away for the first time. Now price has put in a potential higher low from this preceding uptrend. Now we come and test the highs yet again for a second time. But once we have another bearish bounce, we put in another higher low. Now we're coming for a third time. Now we're putting in another higher low. Now we're coming for a fourth time. Now we're putting in another higher low, right? And we're getting so many tests, but we're steadily creating higher lows in the process of it. This would be, in my subjective opinion, a bad trade setup to place a sell. Because if we're steadily creating higher lows, not even higher highs, that is a wedge pattern that could cause a breakout of the zone and we come back to test it as support. So if we're steadily creating higher lows in an uptrend and you're trying to trade a bounce off of a significant horizontal level, and off of the first test, we put in a new higher low. Off the second test, we put in a new higher low. Off the third test, we put in a new higher low. You need to be able to read the market structure and understand yourself. Price is probably going to end up wiping out this zone because we could see we're steadily creating higher highs and higher lows, and price is having a very difficult time actually wiping out the previous lows, and we're steadily coming up to the significant horizontal level. Now, what does look better is if, again, there's no certain number of like, this is too many tests of the zone, but what a lot of time happens is we will have a push into a significant horizontal level. Price will have an impulsive move towards the downside. And then we're just having a difficult time wiping out the highs, sort of like this. And like we could put in like lower highs in the process of doing so. This is sort of ideal of what you want to see, right? A very impulsive move into the significant horizontal level. We have that bearish impulsive move towards the downside. It's not exactly putting in a higher low or anything like that. It's just sort of having a bearish impulsive move. We're coming to try to wipe out the highs. We fail. We come back to the lows. We come back, try to wipe out the highs yet again. We fail. We come back to the lows. We could honestly test highs literally like handful to 7-8 times, and it'd still be a valid trading setup. That's exactly what happened actually on AUD NZD, what I showed you earlier, right? You just need to get a very good idea of understanding price action and market structure and using them together to understand if the trade setup makes sense. So if a preceding trend is continuously creating higher highs and higher lows or lower highs and lower lows, and you're going to trade a bounce off of that zone, be a little bit more skeptical and understand that the overall trend could actually wipe you out of that trade. But anyway, Euro AUD, I'm waiting for price to actually meet these previous highs yet again and then show that bearish price action. That price could potentially reverse towards the downside, whether it's top heavy wicks or the position of the real buy near the bottom of the candle, before actually placing any sells around this weekly daily resistance level. So I'll just be waiting for more bullish price action into the significant horizontal level, and then I'll be waiting for bearish price action to confirm that we're respecting this as potential resistance. Let's go through a couple more trading setups. Don't lose me here. I got really valid trading setups, and I'm not guaranteeing anything, but I could assure you a couple of these trading setups just will play out. Probability speaking, I've done the back testing. I have the data around these exact currency pairs and these exact trading setups. I know, like I know the sun will rise tomorrow. I know that some of these will play out. Daily time frame on Euro JPY. We can see that I was planning on trading a bounce off this significant daily 12-hour resistance level. We can see that we fully broke through the zone. I'm waiting for one of two opportunities, right? Considering we just broke through the significant resistance level, I'll be waiting for retracement back to the significant support zone, and then I will look for bullish price action towards the upside, or I will wait for an aggressive push towards the upside, and I will wait for bearish price action before looking for the potential downside move. Literally as simple as that. We broke through a significant 12-hour daily zone. I'm waiting for retracement back to potentially treat it as support. Or if we just skyrocket it towards these weekly daily highs, I'll just be waiting for a push into that zone, wait for the bearish price action, and then actually execute on a sell order. Super, super simple. I'm keeping it super simple and super clear. Daily time frame on NZD Canadian dollar. We can see we are around a significant weekly daily support zone, and we will see it in a second when the zone presents itself. The zone will present itself when it wants to present itself. That's so stupid. Anyway, daily time frame, we can see that we have reacted with this zone very significantly as support or resistance in the past. Clear intent with direction. Like I said, this zone is the epitome of clear intent with direction. Every single time, for the most part, that we've come to this zone, we've bounced as support or resistance, and we'll probably be able to see this a little bit better on the weekly time frame, but I will go down to the smaller time frame so that we're monitoring the price action and the market structure, right? So weekly time frame, again, super, super clear intent with direction. For the most part, every single time we've come to this zone, we've bounced towards the upside, or bounced towards the downside as resistance, right? And we can see for the time being, we've pushed into this zone and we're beginning to bounce, giving us a good indication that we could potentially bounce as potential support. Let's go down to the hourly time frame and get a better idea of what the heck is playing out. So we can see on the hourly time frame, we did just form a beautiful bullish candle towards the upside. So there's one of two things that you could do in this situation. You could just FOMO into the trade and you could place your buy right after this nice bullish candle closure, or you could wait for price to come back to the zone, get a better entry, and then wait for price to make that another bullish impulsive move. Because this bullish impulsive move around this 12-hour daily zone is giving us a good indication that buyers are present around this significant horizontal level. And we could see all these bottom heavy wicks around the significant horizontal level, right? Same thing is playing out around these horizontal levels. We're failing to wipe out the lows, failing to wipe out the lows, failing to wipe out the lows, and that's validating that price could potentially respect here as support. We could see these bottom heavy wicks in the position of the real body near the top of the candle just failing, and this happened near the open of the London session, and then we can see we finally broke out of that indecision with some decision with this bullish nature towards the upside. What I'll be waiting for is a retracement back to the significant horizontal level just to get a better entry, and then I'll be looking for upside move. Because if we just placed a buy right now and FOMO into the trade because we saw that buy, our stop loss, our risk to reward ratio wouldn't be as ideal, right? Because the stop loss has to be low. These has to be below those previous wicks. And then the take profit has to be way wider, and maybe the take profit doesn't make sense with the previous highs. So why don't you just be more patient and disciplined and wait for price to come back? And even if it doesn't come back, who cares, right? Who cares? People stress so much about missed trading opportunities in the world's most liquid financial market. There's always going to be another opportunity. Stop feeling bad for yourself. Stop feeling bad for the fact that you missed a trading opportunity. There's 27 to 30 different currency pairs that you could trade in the foreign exchange market that literally all are valid to trade off of. So stop getting hung up off of your missed trading setup. Why don't you just look at the next trading setup? USD CHF, let's go to the weekly time frame. Again, weekly daily time frame is what we're starting off of. A couple more trading setups, 2 more trading setups, then I'm done with you guys. Don't worry. Weekly time frame, we can see that we do have a significant support resistance level that price has interacted with in the past. We can see we're melting on USD CHF right now, but we can see that we do have a significant weekly daily zone that price has interacted with in the past as support and resistance. And I'm going to go down to the daily time frame. I'm just waiting for price to push a little bit deeper into this zone. And remember what I said, I like to mark up smaller structured zones within the larger zone. So a smaller structured zone within this larger zone for me would be where price has potentially or has reversed that previously. and where I want to see it interact with now. And it seems like this is a nice little smaller structured zone that I want to see price interact with, which is where my alert is pretty much sitting at right now. So just waiting for price to push a little bit more aggressively into that daily, weekly support zone before looking for potential upside movement. And then last but not least, USD Canadian dollar. We had a break and retest of a significant daily structure in the market, and I was just waiting for a potential reversal towards the downside, and we could see, voila, it's actually played out. We could see a super clear daily horizontal level that price has reversed at, and a lot of people would be like, Mike, that's not super clear, right? Once you mark up zones over and over and over and over again, you get the reps in over and over again, I can guarantee you it's going to be super clear, right? The only reason it's not super clear right now is because you're not training your eye for it, right? You're not training your eye for your trading setup. You're not spotting horizontal levels like the back of your hand. You're just not doing it. The more and more and more you do something, the better and better and better you're going to get at it. Just like kissing, just like riding a bike, just like skating, just like hitting a baseball. The more you do it, the better you're going to be at it. Of course, the first couple times you're going to be uncomfortable marking up zones because you've never done it before. That's why you should backtest your trading system so that you become familiar with your trading setup before you actually trade it in the live markets. Most of you are trading a trading system that you barely even know in the live markets with your own live capital that you worked very hard for. Stop doing that. Backtest your trading system, derive the statistical data, know the system like the back of your hand, train your eye for your trading setup, and then trade it in the live markets. But we can see that we have this super clear daily horizontal level that price has reversed at in the past. Price pushed into the zone. We broke through it initially, had a nice little candle closure past the zone. We came back, tested it as resistance, and we pushed towards the downside. I want to really quickly look at the price action just so that we can look at the price action, get a better idea. Oh, what is the price action that price is reversing around this significant horizontal level, right? Lo and behold, we had a very steep push into the zone. We weren't able to catch an entry just because this was an aggressive push towards the downside, and we didn't come back up towards the highs and like test the highs and then look for downside movement. So we weren't able to actually catch an entry on this significant horizontal level, and that's going to happen, right? You're going to have the perfect trading criteria. You're going to have the perfect trading setup that you've been waiting for weeks, the perfect zone. You have it all outlined, but the trading criteria just did not meet what price is doing in the market. And that happens. It's okay to miss trading setups. It's just going to happen. You just need to be able to control your emotions and just execute on the next trading setup. So yeah, so that's what I'm going to be waiting for. All those high priority setups. Hopefully you guys absorbed a good amount of knowledge from it, not just from like the market outlook, but also sort of going over the pairs, what I look for within the market structure and the price action, marking up smaller structured zones and getting a better idea of multiple rejections away from significant support and resistance levels. Do we have any